Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
What is up, Zingers? Hello and welcome. Happy Wednesday, guys. Do we have a great show in store? It is time for Futures Fever, sponsored by Apex Trader Funding, brought to you by Benzinga. Guys, we have a great show in store. I'm going to show you guys some technical analysis. We're over halfway throughout the year, and what started as a very bearish year because of the tariff uncertainties, we were down almost 22% on the S&P 500 from all-time highs. We are now at new all-time highs. So I'm going to do some analysis, tell you guys and show you guys what was moving markets and how you could take some day trades going forward in this current market conditions. So let's get into it. We have some slides and we have some information to go over as well. So what's on today's agenda? We're going to go over how Apex Trader Funding works, live market insights and trade setups, and we're also going to be doing a giveaway. So guys, make sure you fill out the form in the comments for a chance to win a free Apex Trader evaluation account. So what are prop firms, guys? Prop firms versus personal capital. Let's start there. What's the difference? Well, starting capital, that's for one. With Apex Trader Funding, the cheapest account is a $25K account, and that's $147 a month. Now, the reason there's an asterisk next to this is because Apex is always running a sale. So even if it's $147, the minimum you would pay is going to be 50% off. So it's going to be about $75 for that account. And that's for the 25K account if they aren't running any sales. Right now, they're running 80% off all evaluation account sizes. So make sure you use discount code FFEVER at checkout to save 80% off. Now, with Apex Trader Funding, as we mentioned, it's very cheap. We get started maybe $80. Right now, it's on sale for 80% off, so only $30 for an evaluation account. Starting capital on a traditional broker is at least minimum, guys, $500. And if you are finding a broker that's taking less, there's a good chance you're meeting the bare minimum requirements to have enough margin to trade futures, and you're not giving yourself enough cushion. When you start with $500 on a futures account, you're also only going to be starting with micros. You won't be able to trade minis. When you get Apex Trader Funding accounts, you're able to trade right to minis. You're able to take your time, have your set risk, and really see where you are with your trading journey without risking any of your own personal capital. So risk of personal loss, guys, if you buy an evaluation account for $30 and you blow it, which means you would lose, let's say $30 for a 50K account, your trail stop is $2,500. So $2,500. Let's say you lose that $2,500. There's no penalty. Apex says, that's okay, no problem. Get right back on the horse, get a new evaluation account and start over. Whereas if you're on a traditional broker and you're starting as a new trader, if you blow your account, you start an account with $2,500 and you lose it, you're down $2,500. And a lot of people who are getting into trading don't have that kind of capital to risk at first, especially when it comes to futures markets that can be very volatile. But the great part about futures is us being able to define our risks. What's up, Ozzy, man? I'm ready. Let's go, guys. Who's got the fever for today's Future Fever? So, and leverage provided, guys, leverage provided by prop firms is huge. Again, to be able to get an evaluation account for $30, right now they have a sale running for the funded accounts. That's the price at the performance accounts. That is on sale for $140. So if you get a 50K account for $30, you pass it on your first try, you're spending a total of $170 to have access to trade minis and to be able to take out payouts. In a 50K account, the maximum payout is $2,000. So in total, you're spending $170 of your own capital and able to take profits and payouts of upwards of $2,000 and higher once you pass a certain threshold. So guys, risk to reward wise, right? ROI, return on investment wise, putting in $170, maybe it even takes you an extra evaluation, so add another $30, $200 of your own capital, then taking a payout of $2,000, and it's basically paying for itself and then some. And that's the great part about prop firm space and Apex Trader Funding is once you do start getting on a bit of a roll, you get a few payouts going, it really starts backtracking all of your costs for those evaluation accounts. Whereas when you're trading your own personal capital, It takes a lot more than that, because remember, each time you trade your own personal capital, a $2,000 account, and you blow it, that's a real $2,000 that you're out of. Whereas if you started with a prop firm and you put down 30, you passed because you showed consistency, and now you put down another 140 and you blow it, you're only down $200. Guys, that is a huge difference. Gives you the ability to take more trades, to set up new accounts, and gives you the ability to trade without the pressure and the emotional stress that if I take this wrong trade, I might blow my account. I might go too heavy. I might feel FOMO, fear of missing out. And these are all real emotions. And as traders, we know that we have to be systematic with our trading, but we also know that we have to be realistic. We're all human. We all feel emotions. And by creating a system and even using prop firms, so we're not risking our own personal capital, we could stay away from any emotions that are going to make us lose money. So guys, here's some tips for each account size. So 25K account, your goal is $1,500 and your trail stop is $1,500. So it's a pretty even 1-to-1 on your trail stop and your goal. Now, some people would risk 2% of their trading account, and that's considered the 2% rule. This is a safe rule if you do have a full 25K account. Now, because we don't have a full 25K account, we're really trading off the trail stop. Our trail stop is $1,500. So if we had an account that was $1,500, there's no way we would be risking $500 of it. But if we had an account that was $1,500 and trading the 2% rule, $30 per risk isn't really going to get us anywhere anytime soon on these prop firms in terms of passing and getting funded. So what I like to do is I like to sort of take the trail stop and divide it by 10, because what that's doing is that's telling you you could take 10 incorrect trades, and that's what it'll take to blow the account. Not just 10 wrong trades, but 10 wrong trades in a row, right? And that's because you're defining your risk, you're setting your risk, and you're following it. So if you take 2 or 3 wrong trades, you're down 150 plus 150 plus 150, you're down $450. Then you start taking a couple green trades and you have a 2-to-1 risk to reward. You're able to make your money back and then some, and not have that anxiousness or worry that, oh man, I'm down $450, my account's gone. Because $450 on a $1,500 trail stop is really not that big of a stressor. We have to know that. Whereas if it was our own $1,500, being down $450 would feel like a stress. So that's sort of where the divide comes between prop firms and personal capital. 50K accounts, this is where we start to feel a bit of a spread on our trail stop and our goal. So our goal is $3,000, our trail stop is $2,500. 2% rule on 50K is $1,000. We are not risking $1,000 on a $2,500 trail stop. So our real risk on this one is going to be now $250. Again, that would be 10 incorrect trades in a row would blow your account there. And also, a 2-to-1 risk to reward, it would take 6 correct trades in a row. So it'd either be 10 wrong or 6 correct. So you see how we could have less winners and still be profitable? That's one of the best parts about futures trading and having a good risk to reward, or at least a 2-to-1 risk to reward. That alone will help you stay in the game longer and have a lot less emotional attachment to trading. 150K account, guys, this is where we really start to see a spread. So we have our goal of 9,000 and our trail stop of 5,000. But what's great with the 150K account is the trail stop is double our 50K. So we do have some more room. Obviously, our goal is much higher, but we are able to trade more contracts because our trail stop is giving us more cushion. 2% of 150K is $3,000. Having a $5,000 trail stop and a $3,000 2% on the 150K account, you would blow that your account in less than 2 wrong trades, because 3,000 on your first wrong trade, 3,000 on the second wrong trade, you would blow it before that second trade even hits your stop loss. So 2% of 5,000 is only 100, not really going to pass a $9,000 goal with a $100 risk. So what do? We divide our trail stop, that 5,000, by 10, and now we have a real risk of 500. But as we see, guys, take a look at how many correct trades it takes on the 250K account too. So it starts off with the 25K account, 2-to-1 takes 5 correct trades. 2-to-1 on the 50K account takes 6 correct trades. 150K account takes 9 correct trades, and then the 250K account takes 12 correct trades. So in terms of trying to get passed, trying to get funded, and trying to get a payout, I would definitely recommend traders get started on a 25K and 50K account. Guys, don't forget, run that like button up if you learned something. If you have any questions, drop it in the comments below, and don't forget to fill out that form for a chance to win a free Apex Trader evaluation account. So access to multiple accounts and discounts. This is also why I mentioned that getting started with Apex Trader funding is such an advantage to any beginner trader, advanced trader, because it gives us the ability to use multiple accounts to let us size differently on some, or even use some of them to copy trade. If I'm consistent on a 25K account where I'm risking 100 to make 300, and I know that psychologically when I up my risk, it's a lot harder for me to trade. Remember, guys, as much as it's systematic, we're human too, so psychology plays a big role. So if I have a 25K or 25K account, I'm risking 100 to make 300. I've been consistent for a week. Well, then guess what? I'm going to want to copy that account. I'm going to want to copy it from one account to maybe 5 accounts. And what's great, guys, is I'm going to show you Apex Trader Funding partnered with Wealth Charts recently. Now, Wealth Charts is going to be your go-to if you're looking to copy accounts. So Wealth Charts plans. I personally haven't opened a Wealth Charts plan just yet. I was definitely looking into it to copy some accounts for myself, but it's really great. They're upping their ante with it, and they're really announcing some new stuff as well. So you do a Wealth Charts plan, and right in the Wealth Charts platform, you're able to select copy account. So right now, if you were to do a Rhythmic plan or a Tradeovate plan, you usually have to find some type of add-on, maybe use NinjaTrader or use the Tradeovate plugin to copy your accounts, which sometimes could be a little faulty, but once you get the gist of it, it is pretty consistent. But as for new accounts, Wealth Charts plan, guys, makes it so much easier to copy trade. So you do a Wealth Charts plan. Let's say you get started on a 50K account. Again, it's $167 right now. 80% off brings it down to just $30 a month. Nice, you got it, guys. So $30 a month, 50K account, you pass it, boom, you're funded. You could take $2,000 every 8 trading days. With that being said, that means you could take $6,000 every 8 trading days if you have just 3 accounts. Guys, Apex lets you trade up to 20 accounts. If you're making $2,000 every 8 trading days per payout and you're on 20 accounts, that $2,000 is going to multiply times 20. You're looking at $40,000 just because you're copying accounts and not changing anything of your trading. You can also save accounts. So guys, something that some people do, and what I like to mention to others, is that you don't, just because you have multiple accounts doesn't mean you exactly or directly have to copy them. I know some traders, what they'll do is they'll look to copy account for their evaluation. So once they pass it, they pass 10, they pass 20. Then once they're funded, they'll start to copy trade on just say 5 of them or 6 of them. Or if they had 20, they would do 10 of them. Because what that's doing is that's giving yourself, again, an emotional cushion to say, okay, if I blow these accounts, if I'm on my funded account, let's say somebody tweets something and markets go awry and it blasts through my stop loss, it liquidates me, it ruins my accounts. I don't have to start back at eval. I have my other funded accounts. I could be patient. Apex Trader Funding, guys, one of the best prop firms in the industry, hands down. Get your funded accounts, leave them alone for a bit. Apex does not care if you trade them every day, if you trade them every other day, if you trade them once a week, if you trade them once a month, as long as you hit the rules in terms of 30% rule, hitting 8 trading days, having at least $50 of profit in 5 of those 8 trading days. If you're following your rules, Apex is happy with you. Apex Trader Funding, guys, now this is another big one which sets Apex Trader aside from all the rest of the prop firms. They are always running an amazing discount. So usually anywhere between 50, 71, 80, and upwards of 90% off. Now 90% off doesn't happen too often. Right now we are running an 80% off all evaluation accounts, so make sure you use discount code FFEVER for Futures Fever when you download an account and create an account. So 50% off, guys, that's their bare minimum. So even when it says they're not running a sale, and I'll show you their website. So sometimes what will happen is when you come to their website, if they're running a sale, it'll show it right down over here, 80% off evals. Now they also have a Discord community, a free to join Discord community in which they announce their sales. So what we could see in the promotions, we see they announced on 7/9, 80% off extended, 80% off any size, 80% off recurring, $50 resets, which is also a fantastic sale, 1 day to pass, and lifetime PA fees are $140 across the board. So really great sales there. Absolutely love them. And don't forget, use that code FFEVER. That way you'll never pay full price. So here's some do's and don'ts, guys. Now, it might sound silly. Some people might hear these and go, well, of course you shouldn't do that. But as humans, we have to be reminded sometimes. So don't overtrade. Focus on high probability setups instead of taking excessive trades that dilute your edge. Guys, some people think the more trades I take, the more money I'll make. That is the complete opposite. And you guys could ask Peter Tuchman, who's been on Futures Fever with us. Hopefully going forward, we'll have him and David Green back on. We'll get something going. But high probability over everything. The more trades you take, the more risk you're putting on the table. The less trades you take, the less risk. If I put one trade out there and risk 250 to make 1,000, that's a 4-to-1, and I make that trade and I make 1,000, if I go take another trade, I'm putting 250 of my own capital that I just made profits of on the table. Whereas if I don't, and let's say I have my daily goal is 750 and I surpass my daily goal, that should be where our rules come in play. I just realized don't has the wrong apostrophe. So don't rush. Allow trades to come to you by patiently waiting for your predefined setups to align. So guys, when I say predetermined setups, I'm going to give you some examples shortly of how you could come up with a pre-market plan. And what that basically means is you get on your charts before the New York session opens. So New York session opens at 9:30 a.m. Eastern every Monday through Friday. And in with that comes an enormous amount of volume, right? So futures markets are open 23 hours a day. New York session opens at 9:30. Give yourself the opportunity to get on the charts at 8:30, maybe 9 o'clock, to do some analysis, right? Do some top-down analysis, get an overview idea of direction in the market. And that way, when the market's open, you're going to be prepared, you're going to have your levels, and you're going to be ready. And I'm going to show you guys an example of a trade I took this morning using my own pre-market plan, being patient. Don't oversize. And guys, something about being patient, there's a saying in the market that says the market takes the money out of the hands of the impatient and puts it into the hands of the patient. So don't be impatient. Don't rush everything. The more trades you take, the more risk you put on the table. So don't oversize. Use manageable position sizes that align with your risk tolerance and account rules. One trade should never blow your account. Guys, if you're in a trade, currently in a trade, entering a trade, and you have that gut feeling or that emotion start to bottle up, you start to sweat, you start to worry, and you feel like, okay, well, if this goes against me, my account's gone, and you aren't really near that drawdown already, well, then there's a good chance you're oversizing. We have to be patient with that, guys. Do not oversize, especially on evaluation and funded accounts. We want to treat these accounts as if they're our own money, because at some point, once we start taking payout after payout, where you have copy accounts against copy accounts and start taking 40,000, another 40,000, another 40,000, we're able to build our own profits, maybe have 200,000 in profits from prop firms. We're then able to open our own account, right? Because then we're able to have our own personal capital. But until then, it's so important. Stick with the prop firms, take your time, and don't stress your own capital. Trade the trail stop. Guys, this is another big one. A lot of people will trade the account size. We want to trade the trail stop. Prioritize managing risk by adhering to trailing stops rather than focusing solely on the account balance when trading with prop firms. And why trade with Apex Trader Funding, guys? Apex Trader Funding gives access to funded accounts, removing any risk of personal capital, right? So we went over this already. Get access to firm capital to trade futures markets. We're not trading options. We're not trading stocks. We're trading futures. Earn up to 90% off profits, but that's after you make 100% of the first 25 grand you make. I don't know any other prop firms that are doing that, guys. That is huge, and that's per account. Zero personal liability, trade stress-free. You blow an account, you start over. It's not the end of the world. You're not losing thousands and thousands of your own capital, and it's an efficient way to scale and grow as a trader, as we mentioned earlier with the copy accounts. So it's a 3-step process, fairly simple. You pass the evaluation account, you show them consistency and proper risk management. You get funded, you're going to want to do the same thing. You show that you're consistent. Each day you're risking X amount to make X amount, right? Again, if we're looking at a 50K account, let's say our max risk is $250. Well, then I don't want to lose $400 on my day. So I'll maybe risk $150 to $200 per trade if I'm looking for 2 trades. Been stressing my funds for decades and still here, so chill. Yep, just got to stay cool, calm, and collected when we trade. If we start feeling anxiousness, anxiety, worry, what happens is our brains start to fluster and we can't think clearly. We want to be able to think so clearly in the market that we're just reading the clues that the market's presenting. And again, guys, make sure you stick around because after we go over our slides of information, I'm going to go over some market analysis. We're going to go over the ES, S&P 500, the NQ, which is the NASDAQ. I'll cover a little bit of gold and just a little bit of oil too. Oil's been in a really difficult position, especially due to all of the tariff uncertainty, especially involving Iran, Canada. The US gets 60% of their crude oil inventories from Canada. So that's going to have a major impact if there is a new tariff on Canada, which we've had these tariff concerns, these tariff talks since late January, mid-February. And withdraw profits. Guys, you get funded, you pass the threshold, you take out your profits. It's that simple. There is no easy money in trading, but when you follow the rules, you follow the system, they pay out. Guys, I've had multiple payouts in the past with Apex. I have my own funded accounts. It's no stress. Don't worry. Don't listen to the people saying online that they don't pay out. That is nonsense. Those are the traders that are full porting and going against any type of consistency, right? And those aren't real traders. So no long-term contracts, flexible rules, and scalable opportunities. Just like I mentioned earlier, guys, you could pass 20 accounts, trade 5, and leave the other 15 behind and wait till something comes. So major sale, they are running a pretty huge sale, 80% off, right? Use discount code FFEVER for 80% off any account size from 25K all the way up to 300,000. $50 resets. This is another major sale, guys, because if you get an account on sale right now for 80% off, and let's say a month goes by, you blow the account and there are no running sales, you could use your $50 reset to get your reset on that account versus buying a new one, which would cost you at full price or at 50%, $80. So great sale, even if you're not ready to get started with your account. Yep, yeah, Derek's saying ES finally starting to move, so we'll get there soon. Lifetime one-time PA fees. PA is your performance account. That's $140. You don't pay that until you get funded. And Apex, guys, has paid out over $529 million, over $500 million since 2022. That is mind-blowing. They do not, again, I can't emphasize and stress this enough, they will not deny your payout if you've been consistent. And as traders, we want to be consistent. If we feel like we're only making profits when the market gives us a crazy move to the downside, when the market is bullish, I'm only profitable when the market is green, I'm only profitable when this happens, then you need to reevaluate your system, your setups, and your strategy. Guys, win a free evaluation account. Don't forget, fill out that form in the comments below for a chance to win a free Apex evaluation account. Last week's winner was Evgena. I do apologize if I mispronounced that, but congratulations on the free account. If you do win, you'll get an email by Friday saying congratulations. They'll give you a code, and you punch that code in, and you get a free evaluation account, again, of any size of your choosing. Join us every Wednesday at 11:30 a.m. Eastern. Guys, let's break down some market analysis. And then if you guys want, I do have some more slides on account sizes and the 30% rule. It's a big rule by Apex Trader Funding. But I want to get into some analysis because markets really have been moving lately. So as we know, this is more recently, right? So this big green day here after our consolidation, this is where the US attacked Iran. So let's chop it right here. So right here, we have a lot of consolidation. This is because there was a lot of uncertainty going on in the economy after we had a very big reversal. Now, let's start off at the very beginning, right? The very beginning of this year. That's going to be right over here. This is mid-February. Over here is about January. So pretty choppy, pretty range-bound. Trump's in office. What happens? Well, mid-February, he announces tariffs on Canada and Mexico, and big ones at that. What happened? Markets gave us a huge sell-off. Guys, markets can't move without some type of economic or geopolitical factor in them. And if they do, it's most likely a fake out. So when we get some type of major geopolitical event tariff worries, tariff concerns, economic worries, that's going to be able to drive the market. So that drove the market down to our first 10%. So we were down 10% from all-time highs once we broke below this price level right over here. This is the 56.13. So the first leg down took us 10% to the downside. From there, we had our pullback, and we had another major move lower that brought us to 22% off of all-time highs on the S&P 500. A major move, a major hit on the ES. And this all happened, guys, all within 47 days. That is less than 2 months. The market crashed in less than 2 months and then reversed in less than 2 months. Now, we are looking at ES futures here, so ES futures are not at all-time highs. If we were looking at something like the SPY, that's the S&P 500 ETF, this was at all-time highs. See if it loads in for us. Oh, you know why? Because I'm on replay mode. There we go. Perfect. Oh, that's why. So futures should be at all-time highs as well. Take a look at that one more time. Yeah, perfect. Good. Yeah, so futures are at all-time highs. Apologize about that replay mode throwing me off. But we've run up over 30% from those lows, guys. April lows, 48.77. We ran up to highs of 63.43, 30% ROI, 30% to the upside on the S&P 500 in just a matter of, and we'll mark out and see how long it took. 67, 99 days, so 100 days. It took just 47 days. It took half that time for the market to sell off entirely, and then it took double that time for the market to chop its way back higher. Now, that leads me to say another quote from the market, and that's that people are much quicker to sell than they are to buy, right? There's a lot quicker. People are a lot quicker emotionally, and this is where, again, emotions play a huge role, that people worry, people see price levels break, people see selling pressure, they get scared, they hit sell. Once that happens, it snowballs. Everybody's scared. Everybody's hitting sell. But just because everybody's hitting sell doesn't mean we're going to sell off. That's where that geopolitical comes in. Now, right down here, this is about April 7th. This is when Trump announced we had our quote-unquote Liberation Day, right? We all need a liberation. Lovely. Okay, so it came out April 7th. Then just 2 days later, Trump announces, we're going to put a pause on tariffs. All tariffs get a pause except for China. And what happened, guys? Markets rallied over 10% in a single trading session. That is mind-blowing. As traders, if you've been trading since the beginning of the year, you are in historical markets right now. It is a blessing, whether you're profitable or not. It's a blessing to be in these market conditions because you're really getting to learn something crucial. Now, with that being said, we had our tariff deal. Markets popped 10% in a single day. That's our economic or geopolitical news or data that's going to reverse the market. If the news that made the market bearish, that sold off, was tariff concerns and worry and uncertainty, well, then tariff deals, which would be the opposite of uncertainty, would be certainty, is going to give us a bullish reaction and help give us our reversal. At this point, I was telling traders in my community that, guys, I think we're finally seeing some relief. We had a big bull move right here, a huge green day. Again, 10% in one day is a wild run on the ES. I believe it's 500 points, 516 points on the ES. Obviously, something that doesn't happen every day. If we trade one of these candles over here, this is only about 30 points. That is less than a tenth. Crazy stuff, guys. Guys, let me know in the comments. I want to know what futures you guys trade. Do you trade the NQ? Do you trade the ES? Do you trade GC for gold? Do you trade crude oil? I personally love trading the ES and NQ, but if I find there's uncertainty or concern in the market, being able to trade different markets like gold and oil gives me the advantage because they might be trending while ES and NQ are range bound. Now, back to the ES, right? We had our tariff deal 1 here, and then we started to consolidate. Right over here, we have our point of resistance, and we can make it blue, so we know that it was a resistance when price is below it, and it was support when price is above it. So this was a major area that I was looking for. So at this point, I said, okay, we're probably bullish here, but I'll be really bullish. I'll be definite bull market if we could get above this level, and we did. Right over here, this is where we actually had the China deal. So this is the tariff deal part 2. We had some type of 90-day stay on the China deal, on the China tariffs, and that gave us another pop and some continuation. Now, I will mention at this point, we had an issue with yields. Yield spikes, which ended up giving us a pretty bearish reaction on the ES. So we want to be careful for that. We did pull back to the support level, and we held it as support perfectly. Now we zoom in a bit closer and we see this is where the US attacked Iran. We had, instead of a bearish reaction, a lot of people were worried that weekend that we attacked Iran. We're starting World War III. Things are going to blow out of proportion. But guys, we're not market makers. We don't predict things in the market. We just react. So knowing that there was some type of huge economic or geopolitical or global news that came out, well, I want to watch how the markets react. Once we started getting that bullish reaction intraday, New York session opens, buying volume is still strong. We're able to say, okay, here comes our continuation. We're not fighting the trend. We're trending with our friend. The trend is our friend till the end of the trend. And once the end of the trend is not our friend, that's when we know we're going to reverse. But just being able to mark out these levels, mark out these zones. So every morning, guys, I do my pre-market analysis. So basically what that means is I start on a daily time frame, and I'm going to mark out the previous day high and the previous day low. Nice. Oz trades ESNQ, gold, and oil, sometimes platinum. That's another good one to trade. So let's mark out right here. This was yesterday. So this was Tuesday. Today is Wednesday. So I'd mark out previous day high, PDH. And I mark out previous day low, PDL, previous day low. From there, I'm able to also say, okay, well, let's see where our open price is today. Because when we mark out our open price, we're able to see, where are we in the sense of, are we bullish on our daily candle or are we bearish? Because if we're above our open price, we're on a green daily candle. If we're below our open price, we're on a red daily candle. It might sound so simple, guys, but I promise, I guarantee you guys, if you're a trader and you're struggling with trading, marking out these 3 levels is going to make a major difference for you. Marking out these 3 levels and then following through with your own analysis off of these levels. So something I would notice is every time ES does try to break a previous day high, a previous day low, it fails. So right here, this is Friday's price action. Here's Monday. So we would mark out Friday's low for Monday's previous day low, right? And we see that we broke it overnight, but then we went back green. So I'd notice and say, okay, well, it seems like every time sellers try to step in, they fail. That's a great sign for buyers if we are looking for long positions. Same situation over here. Look at this. This was previous day high is up here. Previous day low is down here. We took out previous day low intraday and we reversed right back higher and closed back above it. So again, this would confirm that we're still consolidating. Very choppy markets right there, guys. Guys, make sure you're hitting that like and subscribe. I do appreciate it. If you're here on Twitter, drop a comment and let me know if you trade the S&P 500 as well. So from this point, I mark out the previous day high, previous day low. I look back at some recent price action, see directionally where should we be looking. Then I'm able to knock it down to, say, a 4-hour time frame. From the 4-hour time frame, I'm able to really visualize our range. So right now here on ES, we had this zone right here. This is a 2-hour demand zone. I know it's marked as a supply right now. It's because I marked that out when the chart was inverse. And I'll show you guys that trick as well. But check this out. This was a 2-hour demand zone that worked as the bottom of our range once and now twice. Look at this huge wick. This is today's price action right here, guys. Look at that rejection to this 2-hour demand zone. That is huge. So while a lot of people, if we're looking at the replay mode and we see selling off, if I'm a retail trader and I don't have any demand zones anywhere, well, look at this. We have big selling volume's picking up. We're starting to sell off here. I'm going to take a short. We're going to go keep selling, yada, yada. But what really happened there? Well, we had an area of support. What happens when we have support at lows where a lot of people are trying to chase shorts? We get a short squeeze. Guys, what is a short squeeze? A short squeeze basically means if we were pushing lower, right? So we were going short. A lot of people are short. And then buyers step back and sort of snap it, well, almost like a rubber band or a slingshot, where they say, okay, all these people went short. Some people went short over here below VWAP stop loss at the high. Some people went short over here on the pullback against the opening price level. So these people, they're going to have their stop losses pretty close. What happens at that point? Well, they're going to get ran through just like that. Now, what I would like to see personally is I would like to see ES now come up towards this 62.95. Because again, I'm aware that, hey, listen, at this price level, we had a major sell-off. So I know that anybody that took any shorts after 11 o'clock right here, so this is 11:10, this is 11:15. So anybody that took any shorts after 11:10, they're going to have their stop loss. It doesn't matter where their entry is. They're going to have their stop loss, usually at a pivot. Now, if they shorted it after this 11:30, their stop loss would be at this pivot. So they already stopped out of their position. And when people are stopping out of a short position, remember, they have to buy back, which adds to the buying volume. Now, another tool that I like to use is Bookmap. I don't have it up right now, but it's a great tool for order flow. It shows us passive and aggressive buying and selling volume that really gives us an upper hand of who has control in the market. So let's see. So let's go back to that daily analysis, the top-down analysis I mentioned before, right? So got a little distracted off of how great that 2-hour demand zone held. And guys, so you know how I find my demand zones and supply. What I do is I look for a basing candle. So right here, we'll delete this for now, and I'll show you guys why this would be a demand zone. So we'll go to replay mode, select bar. We'll come back to over here for now. So what makes this a demand zone, and we almost had a few demand zones, because what we look for is we look for an order block or a basing candle. Now, a basing candle would be a small body, and usually on basing candles, they'll have a longer wick to one direction. Sometimes you'll get a basing more like a doji, where it's got a long wick to the upside and a long wick to the downside. Now, when I'm looking for my demand zones, I'd much rather find a basing candle as a red candle, because I know that there were active sellers in here, and mark it from the open to the low, because we have to remember at some point, this candle, there was no lower wick. It was a full body pushing lower. People were selling at these lows over here. Headline driven market, stop everyone out and rip higher. Yep, exactly. But what I look for is I look for a basing candle just like this, and I look for it to form at a low. So we see that this low right here is sitting by itself. It's not really in the middle of price action. It's sitting on a pivot. So I'd mark that out, and I look at what time frame I'm on. I'm on the 2-hour. Come over to our horizontal line, place that right there. And now I have a bunch of templates on TradingView so that I could say, okay, this is a 2-hour, so that I don't have to put the line out there, double click it, and then go edit it. Now that's our 2-hour demand zone. And what's great with supply and demand is it helps us find the highs and lows of our ranges. So we can let it sort of play out here. We could do a little faster on the replay mode. As we know, we did end up holding that demand zone there intraday. And now what's great with supply and demand too, guys, is it gives us an idea of the current range in the sense that we're able to use them as targets too. So even though we created a demand zone to the downside, if we come up here, we could look to see if we created any supply zones to the upside. So let's go back to our replay mode. Let's select bar, and let's come to over here for now. So now at this point, I see that markets have traded away from this demand zone, and we're hitting all-time highs. At this point, this was an all-time high on the S&P 500. So what I like to do when we're at all-time highs is a couple of things. First off, because we're at all-time highs, we don't have any historical data at these price levels. So what we're going to do is we're going to mark out key psychological levels. That's anything that ends in a double zero. So it would be like 6,300, 6,400, or anything that ends in like a 25 or 50. So 6,300, 6,325, 6,350, 6,375, 6,400. So like 25-point increments. The reason we do that is because they're key psychological levels in the sense that there are no historical levels up here, right? So without any history of price transacted up here, we don't know where support and resistance is. Using psychological levels help because there are also other traders that are in the same exact position. ES is at all-time highs, or NVIDIA is at all-time highs. I gotta show you how NVIDIA was holding its key psychological 170 level. It's very important, guys. Key levels are huge, and when you match them with supply and demand, it really gives us the benefit of the doubt. So now let's break it down to the 1 hour, because I didn't see any 2-hour supplies, but now I do see a 1-hour supply. So I see that we had our basing candle, right? So we have our basing. Now this one isn't really at a pivot. Like I mentioned, it sort of created its own pivot, but I do see that price consolidated at that point. And when we consolidate, what that means is price was given the opportunity to sort of chop and fill a lot of orders. So this would be our supply zone, and we would look to try to trade from supply to demand. So we'd look to see if we get one more test of that supply zone. Looks like we got it right here. Now we could look to say, okay, well, now how can I take this short, stop loss within that supply zone, and I'd look to maybe target demand, because I know the past couple of days have been bullish, but I also know we're range bound right here. I see that we're making higher highs, so I'd rather look for longs, but I also know psychologically and internally with the market, we can't just keep going up. We can't go up forever, and pre-market already showed us that we're trying to pull back. So with that relative information, we know, okay, we're hitting supply. We already double topped here. We hit it pre-market. We hit it again here pre-market. This is the 8 o'clock candle. So this is before New York session opened too. But it ended up giving us a beautiful sell-off to that demand zone before it finally held that demand zone. So very important levels, supply and demand, very simple to put on your charts. There are some supply and demand indicators, but the issue with that is they're usually going to change when you change what time frame you're looking at. So guys, the best practice would be creating your own supply and demand zones and marking them out pre-market, right? Mark them out, give yourself time pre-market. Look how great this demand zone worked as our low. And now even the supply zone, we had a double top here for a short position. We came into it again right here. This is New York session opened, wicked into supply and rejected for a beautiful short position right to our previous all-time high. That's this blue level. What I'm going to do is I'm going to mark that out. Previous ATH. So P for previous, ATH for all-time high. And now that's marked out right there. So this was a key level. So we could use supply to key level, from demand to key level. So that's how we could sort of find our range and also find our middle point, because we see that the S&P 500 respected this old all-time high, but it also respected supply and it also respected demand. And when markets range, we know markets statistically range anywhere from 70 to 80% of the time. We want to be able to trade that range. Guys, let me know in the comments. I would love to know what strategies you guys use in the market. Some people use the opening range breakout. That's a fantastic strategy to use. Very simple to plot. What you do is you take the first 15-minute candle open. So you wait, you do have to wait 15 minutes into the market open. So 9:30 to 9:45. So you can't take any trades within that if you are looking for the orb. And then you would mark out the 15-minute high. You draw that as an ORB, opening range breakout, 15-minute low. We'll keep that just purple so we know. And then what you could do is you could look for the 5-minute time frame to close below that orb, and that would be sort of a sign to take those short. You could look to target maybe VWAP, which was right there for a quick scalp, target that previous all-time high, opening price, wherever you're looking to target. Now for me, in my opinion today, ES was a bit stronger than the NASDAQ. And what do I mean by that? And look at this, guys. This is our orb. We'll draw a rectangle here so we could see it. Look at this. Every time we have our orb for our zone, we have our sell-off out of it. And every time we retest it, sellers step in, sellers step in, sellers step in. So the orb is a great way to find your range and direction along with supply and demand, right? You could use the opening range breakout along with your supply and demand zones to get the upper hand, because something, let's say, this is just an example right here, what I do. Let's go back to the ESU. I'm on the ESU contracts. We're able to look at specific contracts. But let's say we have our orb up here and we had a demand zone somewhere down here, which we did have a demand zone down here. You guys remember that? We had, oh yeah, we have the 2-hour down here. So we could look to target that 2-hour supply zone from our orb, right? And have a pretty nice 2-to-1, or probably way more than a 2-to-1, a 4-to-1 risk to reward on that, right? And the reason we wouldn't put our stop loss at the very high of the orb, guys, is because if we are rallying and pushing through, if we were to get within at least like a point of that orb and we have good volume, there's a much better chance that we do get that double break. Double breaks occur on the opening range breakout 60% of the time. So, you know, a lot of times a trade setup that I like to look for, if I was using the orb along with my trading strategy of supply and demand, I like to use, okay, let's see. If we break the orb to the downside first, do we have any demand that I could take a long position take that long position and look to target the orb high. Because if I'm looking for that 60% chance to have that double break, well, then guess what? That 60% chance, those odds are in my favor than the 40% chance that we don't have a double break. So we could look to take the demand trade and look to trade it back into that opening range breakout. Now, we aren't back up there just yet, but we are trying to make our way there. Again, great strategies, great systems, and it's really easy to implement within the market. Supply and demand, just mark it down on some higher time frames. You do your pre-market before markets even open, and stay cool, calm, and collected. Now, something I want to mention, guys, is the 30% rule for Apex Trader funding. A lot of people express concern over the 30% rule. Let me break it down for you real quick, real simple. So the rule is designed to help traders control risk by limiting the portion of profits that can be put at risk at any one time. The rule is not here, guys, to cap us. The rule isn't here to limit us, and the rule isn't here to make us blow accounts, and it's not here to give them an excuse to tell us we can't get our payout. The rule is here to prove and to show that we're consistent, just like we should be anyway. So the 30% rule should really be no issue to you. So consistently following this guideline is essential for protecting your trading account and avoiding significant drawdowns. Guys, this rule, it's not only not here to make you lose in trading or make you miss a payout, it's actually here for the exact opposite. It's here to keep you in the long run. It's here to make sure you don't blow your account. If you follow with the 30% rule along with the rules that you make for your own trading system, you should not be blowing any accounts unless, again, you're on like a 10 trade losing streak, which at that point, maybe it's time to reassess market conditions in your strategy, but you should never find yourself blowing account after account, especially if you just purchased it, right? Never blow an account in one day. Your goal as a new trader shouldn't be how much money can I make. Your goal as a new trader should be how much money am I going to lose? How can I control my losses? If you're able to take a trade and psychologically know that if you lose, you're only down $100, well, then psychologically speaking, you're going to be able to take trades without any emotional aspect tied to them. So here's an example of the 30% rule. Let's say you're trading a 50K PA account, which again is the performance account. You're on a funded account, no longer an evaluation, and your best profit day was $2,000. Well, that's a big green day for a 50K account. So how do you do the math? Well, you would take your best green day, which in this case is 2,000, and you would divide it by 0.3. That's going to do the math for you for what your total P&L should be when you go to withdraw your profits by that 8th trading day. So this means your account must show a total profit of at least 6,667 to remain within the rules limits. If your total profit is below that, guys, here's another major thing. A lot of people think, oh, I broke the 30% rule. I got to start over. There go all my profits. No way. You break that rule, you just keep trading until you get to that goal. Guys, I can't stress enough. Apex is fantastic, and they really do their best to make sure that you follow your own rules with their rules. So trailing threshold. The initial trailing threshold is used to calculate the risk limit regardless of whether the threshold has been adjusted. So even if your trailing threshold decreases, your risk still references the original starting amount until you exit the safety net. So once you exit the trailing threshold stops, the rule shifts to 30% of your start of day profit. So it is from your start of day profit, but remember, you're going to trade the next day to try to fix it, trade the following day to try to fix it. You're not, unless you're taking the payout that day, really nothing to stress about. Continue with being consistent. If your account doubles its safety net, they actually increase the 30% rule to 50%. Guys, if you accumulate $2,600 in profit and pass the safety net, your risk is calculated based on the 30% of 2,600. You make another 2,600 on top of that, profits rise to 5,200. Now your drawdown allowance is 2,600. That's your full profit from the first bout. That's huge. Again, switching it from 30 to 50% of a higher profit scale, that's how we scale up in trading. That is, again, another great aspect of Apex Trader funding. So minimum required balance, guys. This is the minimum required balance to take the minimum payout. So a 25K account, you need $6,600, right? So a 25K account starts at 25K. You'd have to make $1,600. Then you could take a payout of $500. A 50K account, Your minimum is 52,600, and again, minimum is 500. So these are all our minimum amounts that our PA account has to be at in order to take out the minimum of 500. Now, as for maximum payouts, once you're above these thresholds, everything adds to your P&L and adds to your payout possibility. So maximum payouts for each account, as we know, minimum is 500, maximum on a 25K is 1,500, 50K is 2,000. I do believe they got rid of the 70K, so I will notch that out of there. 100K is 2,500, 150K is 2,750, and then we have 3,000 and 3,500 on the 300K accounts. Something I want to mention, guys, is let's say you want a 250K account because you feel like, oh, well, that's 5 times the size of a 50K account. Okay, well, it's not 5 times the max payout. So what you should do instead of taking one 250K account is copy trade 5 50K accounts, because when you're copy trading 5 50K accounts, you're able to take out $10,000 because you're taking out 2,000 per each account. And that's way more than the 3,500 down here. There is no maximum payout after the 6th payout, guys. That is huge. So let's say you're on a 50K account, or better yet, let's say you're on 10 50K accounts and you're up $40,000 on each account. Because remember, you were just trading a 50K, you were growing it for months because for you to get 5 payouts, so it's after the 6th, it's on the 6th payout, you get the max, you get whatever you have in profit. But for 5 payouts, that is 8 trading days between each payout. So it's going to take some time. You're going to build the account. Let's be even, I guess, more realistic. You're up 30K on 10 50K accounts. That's 300,000 across those 10 accounts. You get on your 6th payout, you're able to take out that full $300,000 payout. Guys, that's some life-changing money right there. Even if you were just taking out some people's life-changing money's 10K, 20K, 30K. Apex gives you that opportunity without having to put thousands and thousands of your own capital at risk. And that's really, really mind-blowing, blows every other prop firm out of the water. Competition, there is no competition in my opinion. Really fantastic stuff. Here's some commonly asked questions that people do ask about Apex Trader funding. So as for the 8 trading days, you need 8 trading days between payouts. Do you have to take them in a row? Absolutely not. You just need 8 trading days. You could trade twice one week, 3 times the next week, once the following week. Take your time with it. You could trade 8 trading days in a row, Monday through Friday. Then you could do again Monday through Wednesday. Boom, now you hit your 8 trading days. So it is still less than 2 weeks. When do I qualify for 100% payout? As we mentioned on that last slide, after 5 approved payouts, starting on your 6th, you could take out as much profit as you want. Remember though, when you take out all that profit, you are taking away your cushion because the trail stop locks in. You don't have a $2,500 trail stop your whole entire account. That locks in after a certain point. So how long do I have to pass the evaluation? This is another big one because they do promote that you could get funded in as little as 1 day, but that doesn't mean you have to get funded in 1 day. You don't have to get funded in a week. You don't have to get funded in a day. You don't even have to get funded in a month. Take it at your own speed. There is no time limit, guys. Again, a great component to Apex Trader funding. And is there a daily loss limit? A lot of prop firms struggle because they have daily loss limits and people don't like that. Not with Apex. Apex has their trailing threshold and 30% rule. But again, these are rules that we shouldn't even be touching if we're following a strategic system. And do commissions count towards trailing thresholds? Of course they do, guys. If we were trading our own account, we have to pay commissions. Commissions aren't that big of an issue, though. When we're trading, we're risking 100 to make 300. If we're in 5 or 10 accounts, commissions may be 35 cents per entry and exit. If you're on micros, if you're on minis, it's different too. Really not making that big of an impact. $5 here, $10 here. Don't worry too much about commissions. Now, here's another big one. Can I hold trades overnight or over the weekend? Absolutely not. So Apex does not want you holding trades after the futures market closes. Futures markets are open 23 hours a day, 6 days a week. They close at Friday, 5 p.m. Eastern, open up again on Sunday, 6 p.m. Eastern. Other than that, they're open throughout the whole week. They close at 5 p.m. Eastern on Monday, opens again 6 p.m. Eastern on Monday. When it opens at 6 p.m. Eastern on Monday, that counts as the Tuesday candle because it's considered the next day. But Apex doesn't want you holding through those gaps and through those closes. So make sure you close any positions or any active orders before those futures markets close. Now, on the other hand, let's say markets open at 6 p.m. Eastern and you see a pretty good long entry at 8 o'clock. You could enter that at 8 p.m. Eastern and hold it until the next day, right? Because it's not closing. Markets stay open overnight. You could technically hold it overnight as long as it's still the same trading session. And when are payouts processed? Guys, Apex used to have a payout window, not anymore. Requests are reviewed once they're submitted. There is no longer a payout window. You submit a request and you get approved or denied very quickly. Sometimes within the same day, sometimes it does take a couple days, does depend on time factors and what day of the week it is. If you're submitting it on Friday, there's probably a better chance you get it on Monday. But you submit it on Monday, Tuesday, there's a good chance you might even get it that same day or the following. And how can I link TradeOvate to TradingView? I do have a video for this, and we will get that going at some point. But now let's go back to some charts real quick. We see where ES is currently trading at. And we could also take a look at the NASDAQ as well. Guys, we'll do some quick analysis on NQ, and then we're probably going to be wrapping up our Futures Fever very shortly. Make sure you're hitting that like and subscribe. Do appreciate you all for tuning in today. This morning, guys, I had a beautiful trade set up on NASDAQ I was looking for. So let's see. I'm going to show you guys what my pre-market prep was for this. So we had our watch list. I wrote NQ, NASDAQ, QQQ. Large cap equities have been much stronger than the general ES S&P 500 market, so I'll look to see if buyers do want to step in again. However, they did start running out of steam, so we'll look to see if NVIDIA could pull below 170 key psychological level for shorts along with large cap stocks. Apple, Microsoft, Meta to find selling pressure. Guys, these equities are super important to watch because they have such a big pull on things like the NASDAQ and the S&P 500, but mainly the NASDAQ because NASDAQ is the weighted index for tech. So that's what we want to look for. We would want to trade NASDAQ with weakness there. So I said major zone 23,086 to 23,111. That's this area right over here. These yellow levels. This yellow level was the zone I was watching. We'll delete this blue one for now. So this was an area that came from my previous day's pre-market plan. My previous day's pre-market plan was started over here. I said I want to find support over here. We found support once. We found support twice. Almost found support 3 times there until we finally failed. So what that tells me is, guess what? If we're finding support, and we'll draw that out for a second so we could see it. Support, and we'll copy it. We'll clone it. Support. And and support. Now that we break below it, we would want to watch it for resistance. And that's exactly what we got. New York session opened. We wicked right above our pre-market high right here, hit our resistance level, and sold off like crazy. We went from that supply zone or this area of resistance all the way to demand. And again, that's where we could use supply and demand as targets. That's 200 points on NASDAQ right there. That could have been, right? A trade that could have, would have, should have been. But with our zones, with our price levels, there is no more coulda, woulda, shoulda. There's systems in place that we watch, that we execute on, and that we do not have any type of feeling like, oh, I should have done this. I could have done that. Absolutely not, guys. Our coulda, woulda, shoulda should be how we journal, should be making a difference, making an impact, saying, okay, next time we come into a zone like this. Now, me personally, guys, I didn't take this short because I was waiting for 23,100. When I mentioned earlier, I use a tool called Bookmap for order flow. So Bookmap showed 23,100. A major passive seller was sitting there. Plus, it was a key psychological level. So with all of that being said, I had my short position ready for shorts at 23,100. I had my stop loss ready at 23,111. 10-point stop loss. Is really looking for a nice trade there. I even wanted to target this broken supply as my first target, which again would have been a nice 5-to-1, almost 6-to-1 risk to reward. However, we didn't get our entry. It was just a few points away. I ended up taking this morning an ES long position, believe it or not. And I'll show you guys where I got that entry. It was a scalp, and I'm glad it was a scalp, and you'll see why. So on ES here from pre-market, if we go to our replay system, and let's do all charts, wonderful. And guys, we are going to wrap this up in just a minute. Make sure you hit that like and subscribe. You guys have been a fantastic audience today. Absolutely love to see it. But when New York session opened, basically what I was looking for was we got our wick lower and I found support here. And the reason I found support there is because see this 30-minute, the supply zone we have? When we're trading within a zone like this, I like to use the bottom of the zone as support and the top of the zone as resistance. So I was able to take a long position off of the support right here. I was able to take a very nice quick scalp because it ended up wicking back higher for me, right? And we'll see that that happened very quickly. It happened, but then we ended up reversing after. So I was in that trade, out of that trade, and done for the day. Guys, appreciate you all for joining in today. Make sure you hit that like and subscribe button if you learned something. Apex Trader Funding is one of the best, if not the best, prop firms in the industry. Make sure you use discount code FFEVER at checkout for the best recurring sale. And take care, guys. I will see you next time. Hit that like and subscribe. Later.